Hey everybody, with student loan forbearance ending soon, student loan refinancing is an attractive offer that many students are going to take advantage of. But in this video, I'm going to be explaining the 6 common student loan refinance mistakes that you need to avoid in order to take full advantage of your student loan refinance to pay back your loans as quickly as possible. And we're starting right now. Okay, common mistake number 1 is refinancing your student loans before the grace period is over for repayment. So in case you do not know, if you have a federally backed student loan, meaning that it's one that is backed by the federal government, so think of the Great Lake loans, think of the Navient loans, those loans and those loan servicers are backed by the federal government. So this means that when you finish your college degree, you have 6 months with absolutely no payment due. Technically, you have 6 months from the time you drop below part-time, but for most students and most people watching this video, that's going to be 6 months from the day you graduate. You do not have to make a payment to your student loans. If you are a student who has Perkins loans, that 6-month grace period is actually 9 months. Same thing though, you have 9 months that you do not have to make a payment to your student loans, and there's no extra interest necessarily accruing. Asterisk with this is that you have to make sure your loans are deferred, meaning that when you are in school, they were subsidized loans and they are not accruing interest until you graduate. So again, you have 6 months for most federally backed loans before you have to make a payment, and you have 9 months if you have a Perkins loans before you have to start sending off your payments. Now, why is this important? If you refinance your student loans before that grace period, either 6 months or 9 months, you lose the grace period. So let's say, for example, that you graduated in January of 2021. This is just an example, so just follow along with me. So you graduate in January of 2021. So you have a 6-month grace period before you need to start sending off payments to your student loans, but in March, you are considering refinancing your student loans. If you then refinance your loans in March of 2021, you lose 3 months that you did not have to make a payment, because as soon as you refinance, your loans kick in and you are going to have to start making payments. Remember, do not refinance before that 6-month grace period, because you lose the opportunity to not have to make payments. And if you have a Perkins loans, that window is 9 months. So do not refinance your student loans before the 6-month grace period or your 9-month grace period. So mistake number 2 that students make with their student loan refinancing is not shopping with different banks or companies to see who offers the best interest rate. I'm sure probably even in front of this video, you saw an ad for Sofi, maybe you saw an ad from Wells Fargo. These companies are throwing hundreds, if not millions of dollars towards students to try to get their loans refinanced with that specific company. This is a good thing for students because it means that all of these companies are competing each other for your loans. I highly recommend students look at a bank, a national bank, a local credit union, and a specialized company like the Sofi. You definitely want to check out all 3 of these companies to see who offers the best interest rate. If you want to get a gold star with this, you should take one offer from these banks. Let's say you went to Bank of America and wanted to refinance your student loans. And let's say for the purposes of this video, they are offering you a 3% interest rate on your student loans if you refinance with Bank of America. You go to your local credit union, and then your credit union is offering 3.1, and then you go to a Sofi or a private company and they're offering you 3.0, same as Bank of America. What then you can do is make Bank of America and Sofi compete against each other to try to give you a lower interest rate, because you have two offers that look pretty much identical. So it's up to these companies to decide who's going to budge for your loans. Also, it's worth mentioning that some of these companies are willing to give you free money if you refinance your student loans with them. So I believe that there are certain companies out there right now that are willing to offer you up to $200. Some are even offering up to $500 for you in free money to refinance when you refinance with them specifically. So this can be in the form of a statement credit. This could also just be straight up cash that they'll give you in your checking account or in a check to you physically. But these companies are seriously trying to get your student loans refinanced with them. And so they are oftentimes offering huge incentives just to get you in the door. And this is great for people who are looking to refinance their student loans. Hey, if you're finding this video helpful, I would really appreciate it if you hit the like button down below. And that way YouTube knows to put this video in front of other student loan borrowers who could find this information helpful. It's free and it really helps promote this video and my channel. Thank you so much, and I really appreciate it. Mistake number 3 I see a lot of students make when refinancing their student loans is not pulling their credit report to see all of their student loans. For those of you that don't know, when you go into the financial aid office, oftentimes you are signing up for loans, but they are not all specifically through the school or a federally backed borrower. For example, oftentimes you will have a mix of federal loans, subsidized and unsubsidized. You will also have sometimes private loans, or what the schools like to call payment plans. And then you will also oftentimes have maybe a Stafford loan or a private loan that they're offering you through a third party like Sofi or Sallie Mae or something like that. So all of these are under your name, but the actual school is only reporting, or is only, oftentimes students only think of,
well, I have a loan with the school, or I have a Perkins loan, or I have a, Sallie Mae loan or something like that.
When in reality, you might have 5 or 6 loans across 5 or 6 different companies, and some of which you might have forgotten. It had been 3 or 4 years since you signed up for them, which is totally understandable. But what's not acceptable is for you to just sort of bury your head in the sand and not do your own research and your own due diligence to get exactly how many loans you have under your name. A very simple way to fix this is if you go to freeannualcreditreport.com. I will leave a link in the description and it'll be the first pinned comment if you are interested. And you can go on there and it's a free credit report that pulls all 3 of the credit bureaus. And so you can see all of your student loans that are under your name, so you know exactly which ones that you need to pay off. A really good example of this is actually a friend of mine had started to pay back her student loans, and 5 years down the road, the school that she went to let her know that she had a loan in default that she did not remember signing up for. It was a Stafford loan, and it was technically under the specific school that she went to. So the school sent her to collections for non-payment, and she thought that she was making the payments and being current, when in reality, there was one loan outstanding that she was not getting notified from. So it's up to you to do your own research and make sure you know exactly how many loans are under your name by running your credit report. My question of the day for you all is, are you considering refinancing your student loans once the forbearance period ends? And if so, what are the things that you're really looking for when it comes to refinancing? Are you looking for a low interest rate? Are you looking for free money? Let me know down in the comment section down below. And if you've refinanced recently, please let the community know who you refinanced with and if it was a good experience. So mistake number 4 that I see a lot of student loan borrowers make is not confirming what your current interest rate is before you refinance. Oftentimes our student loans are mixed up with 5 or 6 different loans, sometimes with 5 or 6 different companies. So you have to make sure you know and understand which student loans you have and also what their interest rates are. Some student loans, especially the federally backed student loans, offer relatively low interest rates right off the bat. For example, my student loans when I first graduated college were hovering right around 3.5–4% in interest rate. Even if I was to refinance, I was only making a little bit of a difference in the interest rate, so it really wasn't worth refinancing because I was able to pay them off so quickly. So mistake number 5 I see is tied to mistake number 4, which is refinancing for less than a 1% difference in the interest rate. So let's say, for example, that your student loans, again going back to that last example, are sitting at 17% as soon as you graduate college. And if you were to refinance those student loans to get them down to 5%, then you are making a 12% difference. Let's say hypothetically you have $17,000 in student loans when you graduate college and your student loan interest rate is 17%. If you were to make just the minimum payments on 120 months, then in total you will have paid $35,455 with 20 cents, with $18,455 being just interest. Now let's flip that, and if you do in fact refinance your student loans, the same $17,000 in total loans, but now you have a 5% interest rate, still keeping 120-month minimum payments, and you just pay the minimum, your monthly payment is going to be $180, but total in the interest that you will have paid with the principal will be $21,637.20, with the specific amount of interest paid being $4,637. As you can see, a difference in interest rate is going to make a massive amount of difference over time, because that is how banks make their money. They want you to have a high interest rate and just make the minimum payments. So refinancing your student loans will give that power back to you. But if it's only a 1% difference in a change of interest rate, overall, you're really not going to save that much money. So if you can, try to shoot for at least a 2% difference in the interest rate, ideally 3 or larger. Hey, please remember to hit the subscribe button down below. It's the red one. Make sure it turns gray. Let's get this community to 500 subscribers. We're so close. We're at 470. Thank you so much, and I really appreciate it. And finally, mistake number 6 I see a lot of student loan borrowers make when it comes to refinancing their student loans is not doing their own research to see if they qualify for public student loan forgiveness. Now, I know when it comes to student loan forgiveness and public student loan forgiveness, there are the Dave Ramseys of the world that think it's a scam, that it's never actually ever going to happen. It's up to you to do your own research and realize if you're going to stay in the public or nonprofit world for quite some time, or if that's your overall career path, then it's definitely something that you should look into and figure out if that's the route you want to go. All right, everybody, thank you so much for watching today's video. If you would like to see a video about why I believe that we will not see $10,000 in student loan forgiveness happen by the Biden administration, go ahead and click the video I have right up here. It's also going to be in the cards right up there. And I will see you next week with another video. Bye.